Good evening, everyone. This is Gambell with SimplerOptions.com, and in tonight's free video I wanted to share some ideas we had been working with in GLD. Now you can look at this through gold futures, you can look at it through the ETF, but mainly it's to come in and show a couple different ways of saying the same thing. If you look at the ETF, this is one place that I like doing this because you don't have to worry about contract rollovers. You don't have to worry about making sure you're including an extended or omitting the extended session data. You just have the typical cash session ETF. And in a product that does tend to have some significant overnight moves, it can create these gaps that really opens itself to a good analysis of symmetry. So what that is to say is that if you look back at these previous patterns, and we can see how GLD has corrected in the past, just looking at these swing highs to swing lows, what you want to do is take those swings and then say, okay, from the correction that we saw beginning Monday of last week, what is the correction we're going through now in relationship to the corrections that we have had? From this, you start to get the personality of a market, or just start to think, the last time it sold off to this degree, well, then it staged a very significant rally from, 124 all the way up into 128. So it's the same way of thinking, saying now that we have had that correction, this is maybe an opportunity to see it do the same thing. So we began scaling into these positions out into the GLD 122 and 123 calls in December, looking for a move into the end of the year. And I typically wouldn't quote something like, oh, this is the next $1,000 move in gold, if it wasn't for the fact that it doesn't happen to line up so cleanly. So if you come back to the monthly chart, the progression we've seen off of the daily and the rally off of symmetry is a good step in the right direction, but what we really need to see from here is that we can clear the swing highs that we had back in 2016, and if we can get that move, we should see the ETF go from the 127.26 that it's trading for now up into the 127.2 extension of this major swing. So if we go from 127 into 137, that'll be right at $1,000. And then if you flip over to the continuous contract of GC, you can see exactly the same thing. So, anytime you see a market that's up big, and you look at it and say, well, did I miss the move, or is there more left? It all depends on your duration. In this case, the duration is out into the end of the year, and I think the move is just getting started. So I hope that's helpful, and we'll see you guys at the next free video.